does now, like
Yep.
everything that we do. Okay.
Hello, everybody. C. Ray Brower with Your Perfect Home, and we have Becca Mock, and she's going to update us on everything that Diamond Legacy Insurance Services does, as well as what's going on in the insurance industry right now, and that is coming up next. And we're back. How's it going, Becca?
It's going good. School's back. Got a schedule again.
Got the oldest in college, the next one in school. Things are smooth now.
Things are looking up. Yep, exactly.
That's perfect. That's perfect. Great. So, I know you just barely got back. Might be a little jet lag going on, or I guess it was car lag. You actually drove, huh?
No, I flew. Yeah, no. My husband and my oldest drove to Indiana, and then my youngest and I flew. So, yeah, definitely, caught up back on, the right schedule. But yeah. So.
Back on Pacific Coast time now.
Right, exactly. Yeah.
Great. So I know we've talked a lot about homeowners insurance and what's going on in the homeowners industry, but Diamond Legacy, being a insurance broker, correct?
Mm-hmm.
Actually covers all phases of insurance. So maybe kind of just update people exactly what else they could talk with Diamond Legacy Insurance Services about.
Absolutely. Yeah. So obviously anything that has to pertain to your home. So whether, you own your home, you rent your home, you're renting a home, or even renting a room or apartment, we can help with renter's insurance, which I highly, highly, highly recommend. Very inexpensive, but gives you a lot of coverage. We're seeing a lot of claims where people don't have renter's insurance and they could have spent $150 a year and, been protected.
Right. And that's one thing that some landlords are actually starting to require now, is actually that if you're going to rent the place, you need renter's insurance.
Yes.
And a lot of people think that it's really expensive, but like you said, like $100, $150 a year, and they're covering their possessions.
Yeah, and it gives them some liability coverage too. And a big thing that we're seeing is, especially if you rent like an apartment where, you may not have caused the damage, but maybe there was a fire next door or a car drove through it, things like that. You now need a place to live. And so renter's insurance will not only protect your personal property, it will give you some liability coverage. And then it will also give you some loss of use, so that if you can't live in that space, it gives you money if you need to rent a hotel room or you need to rent, another apartment while yours is being repaired. So there's all these little caveats to it, but it really is good coverage. So renter's insurance is big right now. I recommend it regardless, whether you rent a room, a home, an apartment, so we also write vacant.
That's great. I didn't realize it actually would also, just like your homeowners, your house burns down, somebody drives through it, you have a big flood, whatever happens in your house, you have that coverage to rent a place to stay, whether it's a extended stay place or what, that gets you that coverage for X amount of time. I actually didn't realize that was included in renter's insurance too. So that's something that probably a lot of people don't know, because I consider myself a little versed.
Yeah. I will give you an example. We had a client a couple of years ago. A guy was driving down her street. She was at work. He was texting and driving. He swerved to avoid hitting a squirrel. That was his story. And he literally drove through her master bedroom, and they couldn't pull the car out because of the angle that he went in and the walls. They had to get a contractor to come out and stabilize the walls before they could pull his vehicle out. And It just so happened that the house she was renting was an older home that had asbestos in the walls. And so literally nothing. She had the clothing on her back and nothing else. They had to destroy everything in her bedroom. And it was the master bedroom. So it was a bed,
Right.
all her clothing, all her furniture, everything was gone. And this was somebody who, had just gone through a divorce, was really, living paycheck to paycheck, didn't have that extra money. I mean,
Right.
she literally had one pair of underwear, that she was wearing.
Oh, man.
And we were able to get out there with the adjuster the same day it happened. And he was able to cut her a check so that she could go buy, clothing and furniture. And they set her up in an extended stay. And so she was completely taken care of with no money out of her pocket. So, it was of course less her deductible, but that was subtracted from what the claim check was that was given.
Right.
So yeah, I mean, you just never know. And that driver happened to be carrying state minimums, which covers $5,000 in property damage. Her damage alone in property was about $22,000. And then of course he damaged the home. And so it was, and he had taken out like 2 cars as well. And I haven't checked the litigation on that, but the last I checked was about a year ago, and they were still fighting for who was going to get that piece of the $5,000. So, you think like, oh, he caused the damage, you'll get the money from, his insurance policy. Well, not if it's not a good policy. So,
Right. State minimums are just that.
right.
Minimum.
Right.
And a lot of people don't really think of that. Oh, I got insurance. I'm covered. I got
Right.
insurance. I'm covered. Well, that
Right.
minimum coverage is,
Is
kind of
just
like
that.
an umbrella with a hole on one side.
Right. Exactly. Yeah.
You stand on this side of the umbrella, you're okay. Over here, you get soaking wet. Yeah.
Right.
Yeah.
Yeah. So on top of renters, we also do vacant homes. We do course of construction. We do Airbnbs. So a lot of people don't realize that if you're using your home for short-term rental, you have to have a different kind of insurance because most home insurance will not cover if you do Airbnb or, VRBOs, things like that.
Right.
So,
You mentioned the vacant home coverage. That's
Mhm.
something else that people don't actually think about.
Mm-mm.
Being probate certified, that's one of the first things that when I'm dealing with somebody that's going through probate,
Yes.
is that they need to, number one, make sure that they get the insurance changed because yes,
Right.
hot water heater fails, pipe breaks, hose breaks, somebody throws a rock through the window, and the insurance adjuster comes out and goes, "Hey, nobody living here?
Right.
Oh, sorry,
Right.
no coverage, no
Right.
coverage, zero coverage."
Exactly.
Yeah.
Yeah.
So
Yeah. So yeah, that's homes. And then obviously we write auto policies. If you're using your vehicle for any kind of delivery service, whether it's shipped, Uber, Lyft, DoorDash, all of those. There's so many Postmates. If you're using your vehicle for anything like that, you need to tell your insurance carrier. We are writing some of those, but what the trend we're seeing right now is it used to be that a lot of personal insurance companies would add an endorsement to their auto policy if you were doing that. And I think a lot of them are getting away from that. And really now you need a commercial auto policy if you're doing any.
okay.
Yeah. And
That's is that just here in California or is that nationwide?
I'm going to say just in California because I'm not familiar with the other states. I have not had a client doing that in another state yet, so I'm not familiar with other states. But I'm going to say California for sure, but it could very well be all the states. And so
if it's not, they'll follow California anyway.
Yeah, exactly. I mean, it's becoming very popular, and so it's a higher risk. So just be really careful if you're doing something like that. You need to make sure you check with your carrier to make sure A, do they have an endorsement? B, what does it cover? Some of the carriers like DoorDash doesn't cover things, but I know Uber Eats and things, they have a little bit of coverage that is offered. So you have to really read your contract or have your insurance, agent look at it to make sure.
Right. Make sure, because people don't really think that it's any additional risk.
Right.
Because I'm driving.
Right.
I'm already covered for driving. I'm driving my vehicle. I'm driving. But yes, you're driving, but you're actually driving way more miles.
Right.
And maybe in areas of town that you would normally be driving.
Right.
Because people don't really realize that insurance agencies, I think the word is actuaries. Is that
Actuaries, yes.
correct correct term?
Mhm.
They have actuaries where you live here, and they know, based upon where you live and where you work,
Mhm.
what your route is going to be.
Mhm.
99% of the time, you're going to be going right here.
Yep.
And so this is our risk, because, that stoplight has a lot of accidents. That
Mhm.
corner has a lot of accidents. And people don't really realize that that's what insurance companies are doing, is analyzing the full risk. It's not
Yes.
just you. It's the
Absolutely.
full risk, the places that you could possibly be on a normal basis, right?
Absolutely. Yeah, your risk is definitely based on zip code and location. So yeah, and they absolutely look at that. So I have a lot of people that say, I have a good driving record. I've never had an accident. It doesn't just necessarily have to do with you, although your driving habits definitely play a part. But it is thefts, it's vandalisms in the area. The liability, what kind of claims we're seeing with other people.
Right.
So yeah, definitely. Yeah.
Yeah, I was kind of shocked when, we're doing that work back in Kansas, and the vehicles in Kansas, their auto insurance policies out in rural Kansas are
Mhm.
more expensive than here in California.
Mhm. It's very true. It's
Wow.
very true. Yeah. I haven't, I get asked this question a lot. And now that we're licensed in 10 states, I'm seeing price points for other states. And
Right.
California is definitely the cheapest, which is a little ironic. And maybe that's part of the reason why we're in the situation that we're in too with the insurance market here, is that the rates just haven't leveled out and met up with the risk. Mhm.
Yeah.
But
Exactly.
I think a part of it too is a lot of other states are based on credit score. So California and Texas are the only ones that I think I'm aware of that do not base your rate on credit score. All the other states, part of the premium is dictated by your credit score. So that's one thing. And then in California, we're also not we're rated based on mileage. But most states don't care what you drive. This is the price. And so I think that has a lot to do with it, is that Californians have they've gotten used to and know that, yes, I can fib my, mileage and say I work from home when I really don't. And, therefore I can get the price down. But carriers are really starting to pick up on that. And so now I'd say about half the carriers are going to something called verified mileage. And it's a program where they pull your most recent oil change, smog service, tire, whatever, and they get your last odometer reading. And so they can see, okay, last year at your renewal, your odometer was XYZ. Now it's this. So we're estimating that you're driving 15,000 miles a year, or maybe it's only 1,000 miles, it just depends on the vehicle. And so they're going by that now. And I like that because, one, it just takes the worry and the having to submit your odometer reading, because
Odometer reading.
nobody gets it in the mail, and they forget, and then they don't submit it, and then their rates go up even more because the mileage increased. But so I think it's good. But the only downfall to it is that, say you bought a used car and that car drove 16,000 miles a year, but you do work from home, or you're retired and you're only going to be driving 5,000 miles a year. That can hurt you at the beginning because it's based on your, the odometer readings.
Oh, it's actually the odometer reading of the vehicle, even before you owned it. So,
right.
so So you go to CarMax and you buy a vehicle at CarMax that has been a leased vehicle,
Right.
A rental vehicle that was put tons and tons of miles on it.
Right.
Momentarily, it creates a problem for you because you say they're actually checking your oil changes and stuff based upon the VIN number, which means that they're using Carfax.
Right.
They go to Carfax because most auto repair facilities now are tied in with Carfax for the accidents, for the oil changes, for the maintenance and all that, so that it's reported to Carfax because now the car is guaranteed that what you say it is what it is. It didn't actually end up totaled in Texas when it was in a flood, or totaled in wherever when it was in a flood, and then they moved it out of state and re-registered it out of state. Now it's got a new the same VIN number, but a new license number and a new thing. So it used to be that without Carfax, you could buy a car that you didn't know had been in trouble, had a problem, but now with it across all databases, that's great. That's really good that they're doing that. It's a shame that you get tagged immediately, but you know, they keep track of you, so that's good. That's good. Interesting.
Yeah. So there's a lot of, another trend happening right now is, and it's not something we're a big fan of in our agency, but they're able to add like an app to your phone or a device in your car that tracks your, how you drive. And so not only does it track, you know, how much you drive, but it also tracks like hard stops. It tracks, high acceleration, fast acceleration, things like that. And so, you know, if you are a very cautious, careful driver, it might work. But you do that hard stop and it starts, you know, with red flags, and it will actually increase your rates. And so, you know, a couple of the carriers we write with offer that, and it's just something that we're not recommending to the clients because, you know, what if you let your grandson borrow your car for a day, or, you know, something
for a week, or his car's in the shop. He got in a wreck. He borrows your car and drives away. He was driving when he got in a wreck. And now it comes on your record, not his.
Yeah. So in our agency, we're not a big fan of that. You know, it is an option that we can give our clients. And generally what happens is when you do that service, it gives you a very small discount, maybe 5 or 10%. But the problem is if an issue does come up, then they're like, hey, you lost that discount because you're not a great driver after all.
You've just been lucky.
Yeah.
Beat the odds, which is all the insurance companies are betting on. It's like going to Vegas.
Exactly.
It's a roll of the dice. And sometimes you win and sometimes you lose.
Yes. But in addition to that, you know, we can write our higher risks, like if you have a DUI, if you don't have a license, or if you have a suspended license, if you have an international license, you know, prior, you know, if you're just moving here, you haven't had the opportunity to go get your California license yet, we can write those drivers as well. So those are options. And then of course we also write commercial. So we're really ramping up our commercial side of our agency. So if you own a business, you have business autos, you need a business umbrella. Basically there's really no business that's too big or too small. So we can help with all of that, whether it's general liability, personal umbrella, commercial auto. We even write bonds, so we can do the bonds if you needed that for your business as well. And then the other thing we do that a lot of people don't know in our agency is we also write health insurance. So we do Medicare for those over 65. We have 2 people in our agency that are licensed for that. And then we also write Covered California on or off the exchange. So we can write direct with Blue Shield, Blue Cross, Anthem, Kaiser, just to name a few. So we can take care of you, and whether it's an individual or if it's a group. So for those businesses, a lot of times we're writing their health insurance as well, that they're able to offer to their employees. So we have a lot of options. The only thing we don't write in our agency is bail bonds. So God forbid something like that happens. Don't make us your first call or your only call, because that will be a mistake. But yeah, we can do all of that. So yeah.
Very, very cool. Now, stepping back a couple of things that you cover, you said you can write somebody with no license or a suspended license
Mm-hmm.
for auto insurance?
Mm-hmm.
Really?
Mm-hmm.
Wow, that's got to be expensive.
Mm-hmm. Yeah. Yeah,
Wow.
it is.
Wow,
Mm-hmm.
that that's a little. I mean, uh, I understand the international license. I understand an out-of-state license, but
Mm-hmm.
no license or a suspended license. That's
Mm-hmm.
like crazy.
Mm-hmm.
That's just crazy to
We
me.
don't write them too often. We probably write maybe once a month. We'll write one.
Yeah.
It's not a big market, but I think just like you, people are like, that's a thing.
Yeah.
Mm-hmm.
Yeah, that's a thing. Wow, that it is. It's kind of amazing that it's a
Mm-hmm.
thing. But I
Yeah.
mean, here in California, especially, you're required to have auto insurance. It
Right.
doesn't say you have to have a license.
Right.
You just have to have auto insurance.
Mm-hmm.
Kind of
Yeah.
like the law says that you have to have windshield wipers,
Mm-hmm.
but it doesn't say you have to have a windshield.
Oh, well, I mean, I guess
Unless
there's
they've
things that go
changed
hand in
that
hand.
law.
Yeah.
Unless they've changed that law. I know it used to be that, yes, you had to have windshield wipers. It's a law, but there isn't a law to have the windshield. Which
Yeah. Okay. Well, yeah. And in addition to that, we also do flood, earthquake, things like that. Another thing that people don't use a lot of, but we get questions for, is Mexico insurance, auto insurance. So if you are driving your vehicle out of the country, your current insurance does not cover you. So your current insurance only covers you in the United States. So we do have some clients, whether they have family in Mexico or they're going to visit, on vacation, that need Mexico insurance. And so we do write those short-term, long-term, whatever, depending on your, visit and your stay. We can write it for a few days, or we can write it for a few weeks, or a whole year. So.
Okay. Now you specifically said Mexico, which is, of course, is our border to the south. What about Canada?
We can do Canada too. Yeah.
Canada, you're not covered in Canada either.
Nope.
Okay.
No.
Okay.
Yeah, we can do Canada too. I've only written maybe 3 Canadian policies in my entire, insurance career.
Yeah.
But yeah, we can write that as well.
Okay. That's another thing that people probably really don't think about.
No. Yeah.
That when you're out of the country, because most of us don't drive out of the country except on vacation.
Right.
So yeah, I mean, it makes sense that you're not covered, especially if anybody's been to Mexico and driven or rode in Mexico.
It's crazy. It's like bumper cars.
Wow.
Yes.
Wow.
Yeah.
Now, the first time me and Sue went to Mexico, we went to Estapa Zihuatanejo.
Okay.
And we were in Estapa, and we'd been told that there was this place in Zihuatanejo called Coconuts, and you have to go to Coconuts. If you're in Zihuatanejo, you have to do Coconuts. Okay, so one night we decided we're going to go to Coconuts and asked, how do you get to Coconuts? Just get one of the cabs and say Coconuts. They may not speak any more English than Coconuts, but they'll get you.
They know.
And so we got in, said, hey, Coconuts, and he took off like a bat out of hell. Driving down the freeway. Of course, the freeway is all bumping and what have you. We get into Zihuatanejo, and it is like crazy. Like you said, bumper cars. And he's driving with the horn. And we've got probably 10 car lengths in between us and the car ahead of us. And this lady steps off the curb with a stroller.
Oh, no.
And he's on the horn. I ducked my head.
Right, yeah.
I thought we were going to take her out. We didn't swerve. No, she ran. She went back. I don't know where she went, We didn't hit her. We didn't go, blah, blah, blah. But it freaked me out. I was glad after we was done at Coconuts and I'd had a few cocktails and it was dark
Right.
and late that the ride home was not nearly like the ride in.
Oh my gosh. Yeah. I've never done that. I've only flown to Mexico, but the stories that I hear are, I mean, bumper cars is really all it, people hit you all the time. They get in car accidents and they just keep driving. They don't stop. So
no, it was like crazy while we were there. And I've never drove in Mexico myself, personally drove.
Right.
It's always fly down and take the cabs and what have you. I mean, they're not Ubers down there. They're just taxi cabs in their own car.
Right. Yeah, no.
Or the bus
Very
with the chickens.
Yes. Yes. No, very, very different. So no, that's just one other option we have in the agency. But yeah, flood, earthquake is another. We don't write we write more than Mexico insurance, probably write a couple a month. But that is something a lot of people are asking about. Flood is very optional unless it's required by your mortgage lender. So if you are in a flood zone and you have a loan on the property, they're going to require it.
Right.
But if you are not in a flood zone, they aren't going to require it. And then it's, just a personal preference. And I can honestly say I don't write flood policies unless it's a requirement.
And that's really common, even though floods don't actually know where the flood zone ends.
Right. Yeah.
If you're anywhere around that border of the 500-year flood or the 100-year flood, you could be in the 500-year floodplain and not have it required, but be 3/4 of a mile from the 100-year floodplain where it's required.
Right.
And the water comes way up over the 100-year and it's in your backyard or in your front room or whatever.
No, earthquakes are earthquake coverages. Those I write more than I would think, but a lot of it, to me, I mean, insurance is a gamble no matter what policy it is, but that one's really a gamble. And a lot of people ask Joy and I, do you guys have earthquake insurance? And the answer to that is yes. Is it going to happen? Do we know when it's going to happen? No, we don't know any of that. I recommend really high deductibles to save you some money. And then, even in the event of an earthquake, unless it's catastrophic, you're probably not going to even use that policy. If your home shifts off its foundation, you're going to need to use it, and a high deductible, they're just going to subtract that from the check they cut you. So it's not like you really have to come up with it anyway. And if you do need that money to, rebuild, it's going to be a hell of a lot easier to get a loan for that deductible than it is going to be to get a loan for the entire, home, especially if you already have a loan. So, so that's kind of the way I look at it. But it is a gamble regardless. So
one of the things you just said was you've already got a loan on the home and you've got to get another loan to cover the deductible, and a total loss where you're rebuilding the home. The insurance pays off your mortgage, doesn't it? So you end up with having to refinance your original mortgage along with the deductible cost of rebuilding the home.
Yeah, because the insurance doesn't pay off your home, the loan, because it's insuring the property itself. And so if the home is, in the event of an earthquake, let's just say for easy math, you've got a $500,000 loan. Maybe that's the value of your home. Maybe it's not. Depends on how, when you purchase it.
How much.
Yeah, exactly. But, if you have $100,000 deductible, you still have to pay that $500,000 loan on your home. And then you've got to rebuild your property or maybe you only have to put 250,000 into it. I don't, I mean, there's so many what
Yeah.
ifs with it, but, that way, if you have earthquake insurance, at least that way you're still able to pay your mortgage, and then you can, either come up with 100,000. I mean, some people tell me they have the deductibles in their bank account, just stashed away for a what if account, but otherwise, you're going to have to come up with that money to rebuild your home. And if you don't have earthquake insurance, then, you're going to have to come up with the whole amount, versus if you do have earthquake insurance, you just have to come up with the deductible. And so if you don't have that money in the bank, then, you could always get a loan for 100,000, or whatever the deductible is. So
that brings up another question then. So, my home was destroyed in an earthquake, needs to be rebuilt. My homeowners puts me up in an extended stay.
Well, no, your homeowners wouldn't kick in because homeowners doesn't cover earthquake.
Well, so the earthquake
only covers earthquake.
Covers me for the earthquake damage.
So they usually loss of use is on an earthquake policy though. So,
okay.
But your homeowners,
the homeowners itself doesn't cover it, but the earthquake does.
Right.
What about my my payment? Does it cover it during the loss of use time? Does it pay my payment?
Not usually. Most insurance, most earthquake policies don't include that.
Okay.
Some have mortgage protection, but very few do. And we've seen, full disclosure, I've never seen an earthquake claim in my insurance, experience, because we haven't had a catastrophic one in the last 15 years that I've been an agent. But, you could see, like we've seen with floods and, other home disasters where mortgages have said, okay, we'll put your loan on pause. You don't have to pay your mortgage for the next 6 months or a year. I mean, they're not taking it off what you owe. They're extending,
Right.
So we have seen things like that come in. And I hear a lot of people tell me, oh, if there's an earthquake, FEMA will help me. I got news for you. Do you guys want to know how much each homeowner got from FEMA in the earthquakes in the fires in Santa Rosa?
How much?
Any guess?
50,000.
Oh no.
Oh no.
$3,500.
$3,500. Wow.
Yeah. So. No. So a lot of people say, oh, I'll just wait for the government to pay, or they'll kick in, or they'll, no, think again. So
I guess one last earthquake related question. I'm on the San Andreas Fault. My property's insured. The San Andreas Fault opens up. I'm on the ocean side of the San Andreas Fault, and we have a new coastline. My property isn't even there to build the house. Now what?
So, your homeowner's policy is going to cover things like fire, physical damage from like a vehicle or a tree or something,
Right.
But anything that's associated with a flood or is your flood insurance. Any damage that's associated from an earthquake is earthquake insurance. Now, what if an earthquake happens, your gas line burst, causes a fire? Homeowner's insurance, because it was fire related, which is covered, by your homeowners. So, there's always the what if to the circumstances of what happened. But yeah, ultimately, like people that had, we've had these mudslides lately, and people are calling and they're so mad because their homeowner's insurance isn't paying for it. Well, that's a flood, but that's flood damage. I mean, it's mud, but it's still from flood. And there's no flood coverage on your property. So, this is another reason why I always recommend having an agent, because an agent can actually explain to you what's covered, what's not covered. What are the scenarios?
Sure.
Where, if you're buying your policy, online yourself, or you're not asking the questions and having a relationship, with your agent. These are things that, an agent, especially in our agency, we like to educate you. I want you to know, if you're my client, I want you to know before a claim happens what you have coverage for.
Right.
I think that's really crucial, because I don't want to be the one to tell you it's not covered.
Right.
I don't want to have to give you that kind of bad news. And I've had to do that before, and I don't want to do it again. So yeah.
Yeah. No,
Mhm.
that makes perfect sense. Because
Mhm.
if you're just like booking your hotel room online,
Mhm.
you go to Expedia, you go to Trivago, whatever, it doesn't matter. What are you looking for?
Right.
What are you looking for? Oh, that motel is $79 a night, and that was $99 a night, and they're right across the street from each other. They both have 5-star ratings. I'm doing $79 a night.
Mhm.
But you really don't know what you get, even though it's
Right.
a 5-star rating. Maybe they have something going on where they're not showing their lower ratings.
Mhm.
There's a whole bunch of stuff that could be happening, and
Yeah.
you paid $79 a night, but you didn't get your true value. And that
Right.
insurance is going to be the same thing. You're
Right.
typing in, I got, this is my address. They give you 5 quotes, $10,000, $1,000. I'm picking 1,000.
Absolutely. Yeah. Yeah. And I mean, one of the other things that we really do in our agency is we read the exclusions. That's something Anthony's always taught us, because he came from a claims experience,
Right.
as an
Right.
adjuster. And so, you want to read the exclusions. It's kind of like, for a long time in California, auto policies, there were some carriers that excluded catalytic converter theft. And so you have comprehensive coverage. You think, oh, great. If something happens, I've got comp. And then they go, not covered.
Yeah. Yeah.
And you're like, so that's why my policy was cheaper.
Yeah.
um,
Yeah.
so
Exactly.
with insurance, the whole you get what you pay for, definitely applies, in most circumstances. 100%. Yeah.
Perfect. Everybody, we've gone a little bit over time. I know we gave a whole bunch of great information today. If you have any other questions, get hold of Becca. Her stuff has been scrolling down there below. She will get you taken care of. Diamond Legacy, I use them. You should. Everybody go out and be the sunshine in somebody's rainy day. Remember C-Ray to find your perfect home. And don't forget to like. Sharing is caring. Subscribe. Depends on where you're watching us. Go out and be the sunshine in somebody's rainy day, and we